cloning, which I talked about, is a very powerful notion. Unfortunately, no business school professors have ever written any books on cloning that I'm aware of that are any good. And there are a few books on cloning, but they miss the point, I think. So bottom line is that so if you did what Buffett did, what these professors said you should do, what Buffett did, you are already beating the S&P by about 11 percentage points a year. Now,
all right, this is Invest Info episode 12, and we're gonna speak about cloning successful investors, cloning the best investors. This is a strategy picked up by Mohnish Pabrai, which he's one of the greatest. He's a really good investor. Learned a lot from Warren Buffett. You see above, I got a couple like John Templeton, Charlie Munger, Peter Lynch, Benjamin Graham, Warren Buffett, Mohnish. Just really good value investors. One thing notice about these guys is they're old. They've been doing it a long time, and that's kind of what you want to clone. You want to clone people that have a successful track record over a long period of time. The more you start to look up investing, you're going to see young people talking about trading and being very active. And Mohnish says activity really is the enemy to investing, right? Being super active. So there's certain things that you pick up and you learn from some of the greatest investors of all time, because they've been through it. They have the experience. I myself, I'm not as old. I'm not old as these guys, but a lot of the stuff that I teach, I'm just mimicking what they taught me. They didn't teach you how to pick stock. They didn't tell you what stock to pick. They didn't predict anything. They taught you the fundamentals of investing, and that's something you want to copy. And something you want to learn from. And then what Mohnish said, look, if you'd have just followed what Warren Buffett did, you'd have been beating the S&P 500 by 11% annually. And the thing about that is, they released the 13 filings. You see what they're investing in, and you kind of get late to it because, they release it every quarter, right? So what you want to do is you want to get an idea of how these guys think. That way you could analyze and pick companies like in the same mindset as they have. I myself, invested in similar sectors as Warren Buffett, but not the same stock. I saw opportunity in the real estate sector. I see opportunity in the liquid natural gas sector. Certain opportunities in the gold sector. And Buffett I didn't pick the same stock as him, but I was in the same sector because I'm trying to operate my mind as these guys. And there's nothing wrong with cloning these guys. There's nothing wrong with being a parrot at and copying. Until after experience, you start to understand and get the concept of value investing and understanding what they mean when they say, do you understand the company? Pretty much when they say that, they mean, where do you see the company in the future? I'll give you an example. Right now, Mohnish, Buffett, Phil Town, they're in Seritage Growth Properties, ticker symbol SRG. Not saying to buy, not saying we have exposure, just giving an example. And you look at the book value per share is around, I believe, 14 last time I checked. But Phil, when he did a valuation of the company, he has it as as a margin of safety price of $17 a share. He sees it being 40 in the short term. Mohnish, he only invests in companies that have a PE, price to earnings ratio of 1. PE meaning when it has a PE of 1, it means he's going to get his money back, his investment, in 1 year. Now that's not talking about 1 year from the moment he invested, even though the stock already doubled. He already got a double on the stock. But he means in the future he will get back a PE of 1. So these guys, you look at stuff like that. You want to know what's the price to earnings. You want to understand cash flow. One thing I picked up from Phil Town, and he mentioned Warren and these guys, is that a common mistake that a lot of new retail investors get is, they'll invest in something like an IPO, right? Meaning the company doesn't have a 10K. It hasn't been around long. It hasn't been around 10 years, 20 years. How can you really analyze that? How can you really understand it if it's just now IPOing? It's just now becoming public. But people, most retail investors will just invest based on speculation. They think it's going to go up. And really just pure emotions. We want to get our emotions out the window. We want to value a company, and we want to understand the cash flow, because without a cash flow, without any cash, we can't truly understand the business. So these are certain things that you pick up from different investors. And I advise you, if you're watching this, who's your favorite investor? Start to mimic their ways. Should look at their track record, see how long they've been doing it for. What's been their rate of return over a long period of time. If you find this video educational, please share, like, comment, and hey, look, you share it to one person, and that person shares it to one person. Hey, that'd be a great thing, because then the power of compounding will start to take effect. The powerful magic of compounding. So that was episode 12. Copy successful, great investors. Learn from the best. I'll come up with a title when I'm uploading. And I'll see you on the next one.